This is Rod Kusanen, Spooman for Risk on February 28th, 2019, all times on the Charter Central Standard Time. We are looking for a short to develop in here. A couple of good reasons. We've got a nice low here, and that price wasn't tested. We had another almost a naked bar here. And because of that low, being as low as it was, that usually indicates that the market will test that price. We've gotten a new high here on the premium, another new high right in here, as you can see. That price will get tested. If this is a lower high, when that happens, when we move up here to 93.25 or better, then we would anticipate a good short. We'll monitor this until it happens. Okay, well, we're getting a short, however, things didn't materialize the way we expected it to. When we saw this low here, which means this isn't the low, I decided to get into the short because what it looks like is going to happen is that we're going to come down, we're going to test that price, and then we're going to turn around and then go back up. That's the one little tricky thing. There is divergence here, not enough for me. I would have wanted to wait to see this high get tested. But when that became obvious, I went ahead and got into a short trade here. I'm going to write it down. We should move down to 87 again. And then we will see what comes next. Okay, so we definitely went lower than we did here. Premium starting to move up, but I expect 87 to get tested. All right, sometimes you just have to jump in. We'll see here. It hasn't come all the way down. Hasn't even hit the projected low value area. And 87.25 looks good. But we've got a lot of people that want to jump in on this. It could be coming right up. Okay, here we go. Oh, new low. Okay. Hold your horses. Hold your horses. Not yet. Way too low here. This has got to cycle up. We'll come up, then we'll come down again, maybe at a lower low. 61.8 is 83.25. Now, you do have divergence in here, okay? There's no two ways about it. But you've got a big number at 83.25. Always got to keep those numbers in mind. 83.25 is 61.8 retracement, and you can't deny it because everybody else is looking at it. But the premium at the moment is divergent. What did we say? It happens. Premium doesn't lie. Now, with this move up here, 89.75 here, if you were so inclined to short this again in hopes that it's going to drop to 83.25, you got to wait for it to come back. $89.75 or better. With a divergence on the premium, that would be worthwhile shorting. And let me explain the logic behind this. If we get to 89.75 with a divergence in the premium and we short this in hopes that it's coming down to 83.25, that makes sense. But what can happen is what just did happen. The market didn't go back up to where we expected it, and it continued to short. Now that could happen again here, but all that means is that this thing is going to come down, and then you're going to want to go long because you know it's coming back up. You just don't know what's going to happen first. And that does appear to be what is taking place right now. We'll see if it goes all the way down. Yep, that's exactly what it's doing. Okay, come on, take it down. All right, let's see if it plummets through here. Okay, good, good. Premium is all short in here. That's just giving us a heads up as to what's to come. I think we're going to, it looks like we're going to take a dive here. It definitely looks like we're going to take a dive. 84.25 here. Look at the premium. 84.25 here. Look at the premium.
It's fairly close to the upper value area, which wouldn't be a bad place to go short either. New low on the premium. We got a secondary short on that move up, but we're still looking for this to, I believe, make it all the way down to 83.25. Looking at the a broader perspective on the market profile, we're at the low value area there at 86.25.
But we've yet to come all the way down here to this particular line, which is adjusted according to the where the low value area is. But you also have the 83.25, 68. Let's look at it. 61.8 retracement right there, and that those are two very compelling reasons to expect this thing to be dropping down there. But you needed to know where to short it, and we told you. Now, admittedly, as we've been tagging these lows in here, look at where the premium is. Premium is not at the moment giving us confirmation of the move down. I mean, right now it is. But at the moment right there, it was not. But now we're okay. Just at 83.50. Now look what happened to the premium. Came all the way down here to 83.50. That's a new low. So now when this turns down again, hopefully we'll be at a higher low on the premium and a lower low on the ES, and that should produce a nice long trade. And bear in mind, the low of the overnight market was 81.75. Now, incidentally, the low of the premium right at that pivot was a higher low. We had this new low on the premium here. We had a higher low here. We have another higher low here. And that can produce, as we see right here, a bit of a move up. But the average here is very compelling. And furthermore, we're just not we're not exactly where we expect this market to pivot. Now it's obviously close. It's very close because 83.25 was the Fibonacci retracement, and that can sometimes produce. And in all fairness to the strategy, it also went long here, and it's moving up. So it could have been that we were expecting too much. $83.50. That's the target. 84. Premium is becoming divergent again. Don't like that. But this should turn. It should come down. And then we'll see whether or not we get divergent. Now, sometimes what will happen is that this thing will go shoosh. And this will really come down fast. It's turning down now, as you can see. $83.75 was just tested here. A little higher on the premium here. So one might want to be cautious and take profits. See how the premium was divergence. Higher low in here, and up we go again. And the strategy right after that low, that got us into another long trade. And even the short strategy has turned long here. Yeah, this is looking. Yeah, we're getting a lot of buying going on down here. So I think we're going to play it safe. Yeah, I'm going to play it safe. All right, now if we come down, so we're out of our short. I'm yeah. Let's analyze this. I guess I think really I'm impatient. I expected that to come down more strongly, and it just doesn't want to do that. So let's take a look at this. All right, so we come down to this pivot, we're at 0.5, okay, negative. We come down to this pivot, okay, and that pivot is right here. And we're also at 0.5. On the average, we're a little lower, but that was enough for me to say, nah, let's bail. And if it comes down, fine. If not, okay, it was a nice short trade, and we made money on it. So you can't complain. So indeed, we're running right back up to the POC. Whether or not we're going to get another short trade remains to be seen, but I think we're going to call it a day. We're out. We did well, and strategy was spot on correct. Now we're getting overbought again in here, and you can see what's happening to the premium once again. So right there, that little bump up on the premium right there, not a bad place to short it. Might work, might not, but you surely see evidence of divergence here. Now, incidentally, what are the odds that the market is going to move up and hit the first standard deviation mark? Well, since 2017, when we look at the odds, if you look at the fact that on Tuesday, yeah, that's Tuesday. Tuesday we failed. Wednesday we failed. All right. So when you fail to hit the first standard deviation mark 2 days in a row, the probability that you'll hit it on the third day, since 2017 statistics were being tracked, that probability is 69%. 69% probability that we're going to succeed. So there's your odds, and you got plenty of time left today to make it up there. Now, since we hit the low, no further long trades were generated. But right in here, it does look a bit long. It looks a little long there too. And let's look at the premium, and we'll make a determination. So since the low, and we made our initial move up here, really nothing to be concerned with on the premium there. Lower low, lower low. So that's going to get tested. It is over here. Lower low again here. And now we're finally getting higher lows. So right in there for long. And as we come up again, and we need to breach these highs, all right, that doesn't happen until over here. The market continues to move up, and look at the average here. The slow moving average 35.62 over here, 33. So we're still higher, we're still moving up. We do get some divergence in here, as you can see. And so, yeah, there's a pullback, but the market is still long. So where are you going to get into this? Well, if you look at that low, all right, so you know that you're going to go a little lower. You do. And right in here, there's your next long trade. We'll come back after the close for a recap. Okay, we're back to review the balance of the day. We had mentioned right as the market was pulling back, an opportunity to get long there with the idea in mind that we have a 69% probability that the market was going to move up to the upper value area, and you might as well play the odds. But as you got into 11:30 here, and then right at noon, right in here, okay, something quite different took place. This turned into what we refer to as a yellow day pattern. And that very difficult to call. Occasionally, the premium on its way up will tell you when it's going to come back down, or that it will come back down. But I don't believe we saw anything this morning that would suggest that. But this is a yellow day down pattern, which we talk about on our website in the member section. Looks like an inverted V, where typically the primary pivot takes place right around noon, which in this case it did, or maybe even into 11:30, which it attempted right in here. And then the low of the day is always lower than the low of the morning, which is what you've got here. Okay? Here in our member site, pattern of the day, red, yellow, red, green, yellow, yellow days. A yellow day up has a rapid sell-off followed by a reversal that will exceed the morning high in the last 30 minutes. The pattern looks like a V, but a yellow day down has a robust rally in the morning followed by a reversal that exceeds the morning low in the last 30 minutes, and the pattern looks like an inverted V. So now look at what happened to the premium right as we moved up to this high here. The slow moving average is higher than it was over here, but the actual highs of the premium are beginning to drop off quite a bit. So you might expect a pullback in here just for that reason. And this being the high of the day, all right, when we looked at the premium at that point was 65 as opposed to 78 over here. So now that also was a divergence. Nonetheless, the premium continued to move higher. And we tested that high. We tested this high over here, but we didn't quite make it all the way up to 94.25 as we did in the other place. But look at where the premium has dropped to. It was 65 at the pivot. It's now 57, and the averages are dropping severely. We're way down at that point. So that would have been a cause for significant concern. However, you might not really believe that this thing was going to short, not until you got over here. Because at that point, as you can see here, we're at 45 on the slow moving average, 0.4546. And now at the bottom of this move, the premium starts to dramatically drop. Now you knew something's up. Something's not good here. This is not looking correct at all. And look at what the automated strategy did here at the top. Here it started shorting. The premature move here, no reason to take that at all. But here, as you saw the divergence, yes. Once again, right at the top here. And in the last case, right there, we're shorting in all three places. That's automated signals. They just appear on the screen. Of course, we teach you exactly why they did. But nevertheless, those are automated signals. Perfect. So now if this is really shorting, we should be getting lower highs and lower lows on the premium. And is that what's happening here? Well, from this point here, we had a little bit of a move up here and another little bit of a move up here, but it wasn't significant. And if you look at the averages, you're not getting fooled by that. But look at the lows. Low pivot here, lower here, lower here. We come into this point, we've got a little higher low, so a little bit of a move up, but then right at the pivot on the top here, a lower low on the premium at that point. So this is all coming down, and you could see very easily that this market is continuing to short. And then maybe if you study pattern and you have a good idea of how patterns work, you might have been able to see that we're going to go lower than the low of the morning. So right at that point, there's the automated signal again. Another short trade right in there. And the strategy started to pull off some long trades. Now let's analyze this long trade in here by way of looking at the premium. Do you see anything in there that looks long? No, no, no. The premium is really dropping in here. So false signal. And what about right in here? That's a nice low. What happens here? Well, you're definitely at a pivot, and you're at a slightly higher low than you were over here. But you've got a nice new low on the premium in here. Not a low for the day, but certainly a low for that for the last hour. So did we get a signal? We didn't get a signal there. Okay, and just as well, wasn't a good good place to go long. We really need to be short because we're going to come back and test that. So you're still short. About the only time that you might have been thinking of going long would have been right in here. Now let's look at the premium again to find out what that's saying. And here, that's not really looking. It's slightly higher, yeah, than it was here. So maybe. But if you would have gone long in there, although we didn't have a signal, as soon as this business starts to occur, you're saying to yourself, this doesn't make much sense. Maybe in here, but I mean, oh my goodness, there's just nothing that really looks very promising about a long trade in here. So now what we need to do is analyze these short trades. Would you have taken these short trades based on what was happening with the premium? You've got one right in here. Okay, look at the premium closely. It's a lower high, that's true, but we've got to be higher than that little spike here. Now, you got it there, and there was nothing else happening at that point. So yeah, you might take that that trade. Wind up getting stopped out, however. What about here? Again, nice divergent. Good reason to go ahead and short that. There's nothing on the premium there that really suggests that doesn't make any sense. But of course, right in here is your best shot, and the premium confirms that particular move as well, because this is all divergent. You know, we're sloping down here, and down we go. Then a big new low on the premium in here, getting close to the close. And so you wind up hitting right at in the last half hour, just as the pattern tells us. In the last half hour, you get the low of the day, and then it proceeds to move back up. So there's your low of the day, right before the close. We get another little short trade here, right toward the close, and then we start seeing in the last few minutes some long trades pushing us back up. So yeah, you've got to watch the premium. Oh, yeah, we should talk about these long trades in here. Let's go back there. No way. Now that's tanking. Premium is yeah, that's not divergent. Premium is tanking in there. You would have avoided taking those trades. Okay, so very interesting day. Didn't quite pan out the way we expected, but the pattern showed up, and if you knew how to recognize the pattern, you would have done well. So that's what we teach, as well as how to read the premium, and with our automated strategy signals, we take a lot of the guesswork out of the decision making and help you to focus on the most important thing, and that is reading the premium. So come take a demo, and we'll be happy to spend time with you and showing you how we do this and what's all involved in our automated open source strategy. I'm Rod Kusin and Spooman for Risk.